pre-approval is where I get everything up front. I'm getting all their paperwork, their down payment, everything is ready to go. So their credit bureau, everything. When I tell you that the client is ready to go, that means they're ready to go. And when you write an offer, I'm ready to submit that to the lender and have an approval, within a couple days, instead of chasing the client for paper for 10 days and getting to the end. That when I get a client, it's usually pretty fast because I do everything up front.
Well, here we are again. We have Tawny Bley from One Street Mortgage. She's going to enlighten us with what's happening in the financial side of things. We're going to get a little bit of an idea about pre-qualifying, pre-approvals, and refinancing today. So thanks for coming on again, Tawny.
Yes, thanks for having me.
Yeah, always a pleasure. So I get this question all the time, and it is, let's get some clarification out there, because everybody says that they've been pre-qualified, and I know the difference between pre-qualified and pre-approved, but can you give us some, an idea of what are the differences and what do you need to do?
Yes. So if you have a client that says, I just did the 30-second RBC app and I'm pre-qualified, you don't want those clients because nobody's looked at their documents, nobody's pulled their credit bureau. They just punch a bunch of numbers in and it spits out a number and says they're good to go. But especially if they're self-employed, because self-employed people, as I know and what you make and what is on paper are two totally different things. So when you get pre-qualified, you're just putting numbers in, nobody's looking at it. Pre-approval is where I get everything up front. I'm getting all their paperwork, their down payment, everything is ready to go. So their credit bureau, everything. When I tell you that the client is ready to go, that means they're ready to go. And when you write an offer, I'm ready to submit that to the lender and have an approval, within a couple days, instead of chasing the client for paper for 10 days and getting to the end. That when I get a client, it's usually pretty fast because I do everything up front.
For sure.
I just don't want them to be stressed out when they're like, you had me pre-approved. Why are you asking me for this now? What do you ask? So I'm ready to go when I get it pre-approved.
I've noticed that. Yeah. That's why we continue to work together too. And it also gives us a lot of leverage when we're writing offers with people and saying I know this happens all the time and most people are writing 14-day conditions. And when I'm working with you or some, certain other mortgage brokers out there, is that we're putting financing at 3 or 4 days, maybe a week. And that's just to kind of get our home inspection in, right? So that does go a long way. So question for you, what happens when you actually go through the pre-approval process? It's obviously, it's really important, but what do you actually do through that? So
I get the discovery call, I call it. So that's the very first call with the client saying, hi, what are you looking for? Do you have a down payment ready to go? What kind of income do you have?
Right.
Are you employed? Are you self-employed? I then send them an email with the link to my application. I give them a list of things. So an employee is usually a job letter and a pay stub, or 2 T4s if they do overtime or bonuses. Maybe I can do two T4s and a pay stub. Get their down payment, 90-day history, to make sure that there's no questions. There's big, large deposits put in there in the last 90 days, which the lenders now ask questions about that. So I have everything ready to go. So the email is, here's the link, here's the paperwork. Send it all to me. Once I know the numbers work, I do the credit bureau very last. That's the very last thing. I ask their permission. We go through it together, make sure that there's nothing on the bureau that's not supposed to be on there.
Or no one's forgot about that $20,000 credit card that they just don't pay anymore.
And that happens a lot.
I bet.
Yeah. So, and that's why the pre-qualified people aren't really pre-qualified, because they don't put all the proper information on the app.
Right. So then when we are pre-approved, that gives you flexibility. I know that everybody's a little bit different, but somewhere between 90 to 120 days, that you would be able to, and comfortable to be able to go out, put an offer on a property, still subject to financing.
Yes.
But at the same time is that you're protected in that.
Yeah. The only thing that people do not understand is the 120 days is just a rate hold.
Right.
So if they go out and get a new credit card or a new car loan, that pre-approval is now invalid. They can't make any changes. They can't go quit their job. They can't. They can get a raise. That would be lovely. But if they're changing anything with that first approval, doesn't mean they're ready, like they're good to go for 90 days. So they're like, oh, I have a pre-approval. I'm going to go quit my job because I have this mortgage approval for 90 days.
Right.
They do new credit bureau checks every 30 days.
Okay.
So if I have put a rate hold in, it could be for 4 months, but if they don't write an offer for 90 days, the bank is going to be pulling another credit bureau.
Oh, okay.
And
So
the
that's just
insurers,
automatic kind of thing.
and the insurers do it with every single deal. CMHC, all the insurance companies, they pull both bureaus at time of offer.
Okay.
So there's nothing to hide.
Right. Or there shouldn't be.
Where there should be. Yeah.
They'll find it, okay?
Yeah.
So you mentioned a little bit, like, you know, obviously you mentioned a little bit about, you know, buying a vehicle and the pre-approval and that kind of stuff, but what kind of mistakes do you see people make prior to actually being pre-approved? Like, what's the right way to do it?
The biggest thing is moving your down payment around, people. You don't need 5 bank accounts. And
Right.
that is a huge thing. People
Do
think,
most people have 5 bank accounts?
oh, some people have 7.
Okay, fair enough.
And
yeah.
you know what, with the home savings accounts now and TFSA and RSPs and bank accounts, checking savings, like there's 5
Yeah, I
things
get it,
right
yeah.
there, right? But it's people thinking that they have to have it all in the same account before they come and see me. And I have to follow the funds. 90 days, I'm following the funds. So it just makes things so much harder.
Oh, so you're going back through every single
every
thing rather than...
now I need, if you're transferring it from your TFSA and everything into your checking account, then I'm looking at that account, and then I have to go back 90, like, so just keep the money where it is and I'll figure it out.
Okay.
So that's a big thing for us
enough.
is following the money, and especially large deposits. People think that they can just, put the cash from their mattress into their bank account, go buy a house. And
I heard that doesn't work.
unfortunately, that doesn't work, depending on how much it is. But yeah, like all funds have to be traced. And whether it's a gift from a parent, that's okay. If you won money at the casino or whatever, like those things, I have actually got one of those approved, but it's cash is not ideal. If you sell a car, if you sell something, make sure you keep your bill of sale.
Right.
Because it's not an automatic. Sometimes if we can't actually prove it,
Right.
it
Kind
can't
of
be
raises
used.
the red flag,
Yeah.
and then next thing you know, you're not using it, and
Yeah.
that deal goes sideways because of that.
Yeah, so down payment is a big one, just like keep all your money where it is. Talk to me first before you move anything. And that's why I tell
Right.
everybody, like, just don't do anything until I look at it. Don't go pay down your debt with your down payment money and then think you can take it back off your debt, because that
Okay.
doesn't work.
Yeah.
Don't go get extra debt. Make your payments. Like, don't forget a credit card payment or a cell bill. Cell bills, people don't think that they show on the bureau.
They do.
Bell does, SaskTel, not SaskTel, Rogers, like there are some that report now. So people think that if we're not going to make a payment, let's make it not that one, but they do show up. And so, yeah.
Well, there you go. Those are all what not to do.
Yeah, don't do those things.
Okay, sounds good. So this is kind of a loaded question, but can you break down the difference between like rates when we're looking at a conventional mortgage and then also, an insured mortgage?
Yes.
So I get that question a lot, and
Yes.
I never know how to answer because I don't know their finances, I don't know their details. But can you give us a little bit of an idea of what those current rates are for people?
Yeah, like a conventional to an insured mortgage rate, they're about, like, standard is about 0.25% difference.
Right. So, and just to clarify, conventional would be 20%
Higher.
down?
Yes, and conventional is 20% down, or on a refinance.
Right.
So if you have over 25 years on your amortization, that's called an uninsured mortgage. If you go over 25 years, so if you do a 30-year on a refinance or a 30-year purchase,
Okay.
you're not getting those insurable rates. So there's insured rates, there's insurable rates, which is 20% to anything under 25 years.
Right.
And then there's uninsured rates, which are 30-year amortizations or a refinance.
Okay.
So there's 3 sets of rates,
Right.
actually.
But then for 30 years only for first-time homebuyers and
No,
refinance?
and a refinance, yes.
And refinance?
Yes,
Yeah, okay.
correct. Or after a
Divorce?
separation.
Yeah.
So yeah, those rates are going to be higher. So right now on a refinance or uninsured, you're about 4.5, 4.49. If you have 20%.
Would that be three years
That's
or
a
5
5
years?
year.
5 year?
Yeah, 5 year. 5 year standard right now on a 20% down is about 4.29-ish. And then the insured rates, I have some specials on, and they're around 3.89 on
Okay.
a 3 year.
Right, okay.
And they range to 4.19. So it just depends, because some lenders don't do things that other lenders do. So just
Right.
because there's a 3.89 out there they have conditions, and they could be a lender that doesn't use 100% of rental income on the suite. So maybe you don't qualify with that lender, and now you have to take a higher rate with this lender, but you qualify now.
So what you're saying is it's not all about
Yeah,
the
so
rate?
it goes from 389 to 4.5, and we'll let you know where you kind of fit in there. And
Right.
I mean, it just depends. And some of those, like the lower rates, they come with conditions of maybe the loan or the mortgage payment has to come out of a bank account from their institution. So some people aren't on board with that, to add another bank account into their lives, because
Right.
it's stressful
There
to
you go,
wake up in the
507,
night
yeah.
and be like, oh gosh, we forgot to get money in that account to make our mortgage payment because our payroll still goes into this account, and it's stressful. So sometimes it's not all about the rate, but
Right.
yeah.
Okay. Well, I've heard it's not usually about, like, you know, there's a lot of variables, and it's also the penalties and that kind of stuff that you're
Exactly.
dealing with too, right?
Yeah.
So,
Yeah. Prepayments. Yeah.
right. So, mortgage renewal.
Yeah.
Is it, I think the bank sends it like 2 weeks before. What's your thoughts on that?
So yeah, the renewal world right now is tough because the banks are very competitive to keep their retention. And I get it. Like they want to keep their clients, and to renew, if you were just to sign a paper, they're not really paying anybody to do that, and it's free for them. But when you, with my clients, I reach out 120 days before, and then I find out their plan. What's their plan? Are they keeping the house? Do they need money out to refinance? Do they want to buy a cabin in the near future? Do they want to open up their equity? It's not just sign right here and renew, because then you're coming to me in 6 months saying, I just renewed my mortgage and now we want to renovate our house. Well,
Right.
we should have talked about that 6 months ago.
Yeah.
You know, so sometimes the renewal rates on the paper are, yes, they're going to be a bit better because of the retention, but on a refinance, the rate's going to be a bit higher, but it's the product that you need.
Right.
Right?
Gives
So
you the flexibility to move on and
yeah, and if
do
you're
other things with your life as well too, right? So,
exactly, and if you're like, I'm thinking about buying in the next year, well, maybe you don't do a 5-year fixed, where on the renewal paper it maybe looks like the best rate and you want that,
Right.
but maybe that's not the right thing, because now your penalty is going to be higher, so you've just cost yourself money to get out of the product if you don't need it.
Right.
Maybe it's a variable that you do, or like I said, you know, let's open up a line of credit if you have the equity, so when you go to buy a house and you can't make it subject to the sale right now,
yeah,
you know, maybe they have
haven't done that in years.
yeah, maybe you have a line of credit ready to go for your down payment, so you're not stressed out about where am
Right.
I going to get my down payment. Well, oh yeah, Tawny just opened up a HELOC for me, a home equity line of credit, to get me ready to
Right.
buy, and I got the money ready to go.
Yeah. So we were talking a little bit about rates and how, like, you know, one, you know, it's not always about the rate, right?
Yeah.
And we were talking a little bit about closing penalties and that kind of thing. Like, what's the typical closing penalties that you're seeing?
Right now, 3 months interest has been
3 months interest?
Yeah, on
Yeah.
so they take the mortgage balance, your rate, and 3 months interest. There is an interest rate differential that could trigger if your rate is higher than what the rates they're giving out. So if there's a loss of interest to the bank, they're going to charge you an interest rate differential.
Okay.
So that honestly, it's about that day and time, and it's subject to change daily. So you're
Right.
never going to be able to predict what your interest rate differential is
Right.
going to be, because you don't know what the rates are.
Right. And that makes sense, because I've seen anywhere from, like, I had one, and this was years ago, but I bet you they were something like $35,000 for
I've seen that.
closing penalties. And then now that you're looking at just the interest for 3 months, that's interest and payment and principal?
Yeah.
Is that what you're saying?
No, just interest.
Just interest?
Just 3 months
You know,
interest.
like 3 months interest, there's a big difference there, right?
Yes.
You're probably looking at 1,500 or 2,000 rather
Exactly.
than 30 something.
Well, during
right? So-
COVID, when the rates dropped to 1% and people were sitting at 4,
Right.
that's when those interest rate differentials came into play, and it was horrific, because they would sell their house. The rates were dropping so quickly that when the house sale came, the lawyer would order the payout statement. They called their bank a month earlier, right, when they sold the
Right, yeah.
house, and the payout was X, and then a month later, the rates had dropped 3 more times, and then guess what? Now there's no money for down payment because it's eaten up by penalty.
Right. Yeah.
Because it can change daily. It doesn't get locked in just because you called.
Right.
It's when that lawyer asks for the payout statement, and exactly that moment in time, that's the penalty.
So the main thing would be is that if interest rates are lower, if they're giving out lower interest rates than what you have
Right,
currently?
correct.
Because they
That's-
want to make their margins, right?
Correct.
So, okay.
Because if they have a balance sheet, they've already lent that money out, so they might have to charge you an interest rate differential.
Right. Yeah.
Not even with a balance sheet, but it just, yeah, depends on where you are in your term and how much you have left. There's a whole bunch of factors that come into play.
Yeah.
And big banks charge higher penalties because they base it on a posted rate, where some of the monolines that we work with don't do that, so their penalties are lower
Right.
typically than a bigger bank.
Okay. Okay. Well, renewal's not just cut and dry.
Not
is
cut
it?
and dry.
No.
Don't sign. Just call
Don't
me
sign.
first, and then if it makes sense, I will be honest and say that rate is amazing. And if you do not need to do anything and
Yeah.
your life isn't changing, I'll be honest and say great rate, sign it.
Yeah.
But until then, like, talk about it. See if that's what you need in your life and
For sure.
where you are at.
Yeah. Okay. No, it sounds good. So this is kind of fun. I know we all have stories. I know you've been selling real estate for a little while here. What are kind of some of those no-nos that you've seen over the years that, you just kind of want to shake your head and be like, does that really happen?
Yes.
Can you give us a couple of those?
One is, do not write an offer if your separation is not complete.
Ooh, yeah.
Huge.
Yeah.
And realtors should make sure that they
know
have the
that,
letter
yeah.
saying that they're good to go, because that is one of the biggest ones where it's at the lawyer's office, it's fine, everything's fine, it's going to be signed, and it's good. It's never good. And it's always one little hiccup that now you've got a 7-day condition and the separation's not finalized, and I will never sign off on those because I've had it way too many times where it backfires. And
Yeah.
now it's like 6 months later and they're still not done the separation, and they've written 3 offers and there's nothing we can do because
Yeah,
if the
I've-
money's held up, like from the sale proceeds, or they have to get their name off title to the cabin because they're getting the house, and if it's not done, I can't guarantee that it's going to be done.
Yeah, separation agreement is a big thing that I
Is a
always,
big
and I
thing.
hear a lot that it's going to be fine, and we're both in agreement, and it's just getting the I's are getting dotted and T's across at the lawyer's
Exactly.
office, and it seems like from my experience, there's always more to the story,
Always.
So,
And
yeah.
every time they even think it's cut and dry, you're still relying on lawyers on each side, right? So the whole point of a separation is getting your independent legal. So just because the one side is done and that's who we're dealing with, and they're like, oh yeah, it's been sent over to the other lawyer. Well, if that lawyer finds one thing,
Yeah.
now it gets sent back to the other lawyer, and then
Yeah.
it can go back and forth, and
And
it
for
could,
sure.
they could be as amicable as you want, but if it's one thing in there, and it could cause a big catastrophe in the end, so.
For sure, and it could be something extremely small,
Yes,
right? It's just something that they don't agree upon.
exactly.
Have you had many people lose their deposits and that kind of stuff by buying a vehicle or something in the middle of after purchasing? I had one guy, he phoned me and he was all upset when he wasn't able to close his house, and he showed up in a brand new truck, and I was
Oh
like,
my gosh.
did you just buy that?
No, you know what? Knock on wood. I have never had anybody lose a deposit, but
Nice.
it's because I prepare
doing the
people properly.
preparation, yeah.
And I mean, I treat it like my own mortgage, or because I wouldn't sleep at night if something like that happened. So I make sure everybody's good to go. The other thing is a no-no is don't go on vacation when you buy a house because it seems like it's what everybody does. They're like, we bought a house and now we're going away for, a month or 2 weeks or whatever. And then they're rushing then possession date is coming up and now they're out of the country or wherever, and it's
Right.
always, but don't you?
Yeah, I do.
Have you had that?
It's such a stressful situation that they need to have a relaxing point, right? But
Yeah.
I get what you're saying, is that there's a lot of moving parts that most people aren't thinking that, 2-3 weeks before possession, there's a lot of things that most people aren't
Yes.
thinking about. Like, we do the same things. We give people checklists. We give people, kind of to know what's around the corner. But at the same time, I've seen that.
Yeah, and then
Yeah.
it's like, oh, you didn't get your home insurance in place, and now how are you going to meet with the lawyer? You come home on possession day. It's like, so I just feel like that's a big thing. It's like, let's not book a trip, and depending on where it is, if you're doing a quick possession, but
Right.
yeah.
Well, that's awesome. Well,
Yeah.
thanks for coming in again. It's
Yeah.
always a treat to hear your insight on the financial side of things for mortgages, and I look forward to continuing to work with you.
Awesome.
Do some more business.
Thanks so much.
Yeah, pleasure.
Thanks.